Okay, so the setup is all right. It's a little mixed, like we've been telling you, because some of the Asian markets are negative, and then markets like China are positive on the back of good data. What about individual stocks? As usual, we've got lots of earnings to cover, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Diwali to all of you. Yeah, there we go. We have all of them there looking nice, against that green backdrop. So yes, happy Diwali to all of you. Let's start with the big number after market hours yesterday, and that was L&T. Vivek, so the margin debate continues.
Absolutely, but quite a lot to cheer as far as L&T is concerned. Core margins, like you mentioned, missed estimates, but still, both sequentially as well as on a year-on-year, there has been an improvement, and that is something that the street will like. Now, talking about the numbers themselves, good quarters, margins slightly muted, but remember, both sequentially year-on-year, there has been an increase over there. More importantly, despite the fact that there were worries on the street whether the company could go ahead and retain its order inflow guidance, the company has retained its guidance across all of the key parameters that they had kept for FY25. Along with that, important development, something that we had reported earlier, the company says that yes, they are now looking to bid towards building thermal power projects in India, and that is a change in stance as far as L&T is concerned. This is due to a change as far as regulations are concerned, as far as the bidding process is concerned. Now, talking about the numbers themselves, beats expectations across most of the parameters. Revenue is higher by 20.6%, EBITDA higher by almost 13%, profitability up 5.5% against expectations of a flat year-on-year growth. The key highlight, consolidated order inflow, despite the fact that it's down 10%, remember Q2 last year had lumpy order wins. Order book very strong, over the 5 lakh crore mark now, and very importantly, the P&M, the project and manufacturing orders, coming in quite strong at 7.6%. Misses the guidance, but the management has alluded that the guidance will be maintained at 8.25%.
Okay, all right, Vivek, thanks a lot for that. Well, let's hop across to Vinny. She's here to tell us about Biocon. Vinny?
Yeah, so talking about Biocon, we are seeing that the Q2 FY25 numbers were a miss versus what the street was expecting. Revenue just saw a growth of around 4%. EBITDA margins have seen a decline of around 200 basis points, while in terms of the profits of the company, they have seen a very sharp decline, 27 crores versus 173 crores, so decline of 84% on a year-on-year basis. What led to this weak performance? Because the generics segment, as well as Syngene, which is the research service side of the business, that has seen a degrowth this time. Generic business, mainly this faced a bit of a pricing pressure, as well as demand pressure also was there for the generic business in this quarter as well. And biosimilar business, that was in line with what the street was expecting. $260 million is what the sales came in for the biosimilar business, a growth of 9%. Other than that, the net debt of the company, that's seen an increase this time as well. $1.4 billion is what the net debt of the company is at. And that's a priority that the company has been focusing on in terms of reducing debt. But as of now, and in line set of numbers, largely generic and Syngene side of the business not doing well, and we're expecting a bit of a subduedness in the stock today.
All right, Winnie, thanks very much. But that's Biocon, but there's Cipla to address as well. So back to you. Morning.
Cipla, we are expecting a strong positive up move today. A big positive development that we're seeing, that the Goa facility that has received a voluntary action indicated. This facility had been, facing a lot of issues since 2020. Now this has gotten a clearance. The re-inspection of the Goa facility was done in June 2024. Now, this obviously getting a clearance means it paves way for one of its drugs, which is a very important drug, that is generic Abraxane, which is almost a $700 million market size that it has. And analysts believe that this could actually lead to some bit of a sales of somewhere between $70 to $90 million for the company on an annual basis. Launch obviously will be sooner than expected, because Street was anticipating somewhere around in FY27 for the launch coming in. Now, obviously, with the VAI coming in, this will be a positive for the company. As of now, in this drug, we are seeing only one generic player who's gotten an approval in October 2024. That was Sandoz. So, surely a positive up move there. Keep an eye out on Cipla. Strong up move is what we're expecting.
Okay, all right. Got that, Vinny. Thank you very much. So, Cipla is going to be on our radar for sure. But it's time to get back to Vivek and figure out how the quarter stacked up for Tata Power. Vivek?
Good morning. A bit of a miss as far as Tata Power is concerned, as far as top line is concerned, but the EBITDA growth as well as profitability beat, the kind of limited street estimates that we were working with. Power demand in the quarter gone by was muted on the back of the fact that the monsoon, unseasonally high monsoon, led to lower generation. Now, talking about the revenues themselves on a year-on-year basis, largely flat. However, EBITDA, strong higher by almost 20%, and this was aided by both much better solar manufacturing and also a favorable regulatory development coming in as far as the distribution side of the business business was concerned. On the back of that, margins quite strong, expanding over 400 basis points on a year-on-year basis. Profitability higher by almost 6%, and this was also aided by the fact that other income this time around was over 500 crore versus just around 291 crore last time around. Couple of key highlights to mention. Remember, now as far as the solar EPC order book is concerned, it's very strong. Almost 15,900 crore is where that order book stands at. And along with that, the 4.3 gigawatt solar cell as well as module facility is now fully functional, and that is expected to start aiding earnings in the coming years.
Okay, Vivek, thanks a lot for that. In fact, we have the management joining us at 9:30 a.m. later today. Just stay tuned for that conversation. But Dabur was the stock in focus towards the final minutes of trade yesterday. Mangalam's gone through the con call, and he's here to tell us more about that. Mangalam.
Well, for those expecting any sort of, reprieve coming in from the Dabur con call, will be a little disappointed, largely because, much hasn't changed. The management has said that they will deliver mid to high single-digit top-line growth in the second half of this year. Demand will be led by volume growth in the winter portfolio and no pricing growth expected in the second half itself. For the market margins, they expect flattish margins in the second half, which implies that for the full year, they will actually see a margin decline of around 40 to 50 basis points. So that would be a slight negative. And on inventory correction, though a large part of it is done, it's down from around 30 days to 21 days. It will settle to around 19 days by December. And the results were weak as expected. The outlook as well weak. So see some bit of red on the stock, but not much because it's already corrected about 12 to 15% in the last 1 month.
Mangalam, thank you very much for that. That's Dabur in focus. IRB Infra should also be reacting to earnings. Back to Vivek. Vivek, morning.
Well, good morning. Slightly subdued said, given the fact that the unseasonal monsoon actually went ahead and impacted construction activity and also impacted tolling revenues as far as IRB was concerned. But when you're talking about the conference call, quite upbeat in terms of the order prospect pipeline. Talking about the numbers themselves, revenues down 9.1% on a year-on-year basis due to the mentioned factors. EBITDA down 3.5%, margins too at 48.4% in this particular quarter. Profitability, however, was higher by close to 4.5%. What did the company say as far as the conference call was concerned? Toll collection impacted due to heavy rains, especially in an InvIT, something that we will be asking the management earlier. There has been some disruption as far as toll collections are concerned. Along with that, the total order book now stands at 32,600 crore, with the O&M portion being at 28,600 crore. Along with that, the company said order prospect pipeline is very strong. 37 crores worth of order prospects is there, with almost 1 BOT project and 4 TOT projects lined up. So that is something that we will get some clarity from.
Absolutely, we will, because we do have the management joining us on the show itself. At around 9:50, we touch base with Anil Yadav to get more details into that second quarter performance. That's IRB Infra in focus. All right, let's move on and figure out, what's the latest with the TCI Express in terms of the performance. Mangalam is joining in with the details. Mangalam, over to you.
Well, no positive surprises here. In fact, weak performance coming in. 2.5% decline in the revenue, 27% decline in EBITDA, and 30% decline in the net profit. What does the management allude this to? Prolonged monsoon, which led to supply chain disruptions and delivery delays. And secondly, because of lower activity in manufacturing and automotive sectors, there was softness for logistics demand as well. See some red on TCI Express.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about Manappuram because Ashirwad is in focus. Morning, Abhishek.
Morning, Nigel. So happy Diwali to our viewers as well as everyone at CNBC-TV18. To begin with, Ashirwad MFI, the stress on MFI sector has persisted with Ashirwad MFI as well. Look at the net interest income. That's grown by 25% YOY and about 3.5% sequentially. The loan growth is much higher, which suggests that the net interest margin might have come under pressure on a YOY and quarter-on-quarter as well. Now, provisions increased by 122% YOY and about 19% sequentially. That's on account of the fact that asset quality has deteriorated. So the PAT came in at 75 crore, which declined by 36.5% YOY and about 25% sequentially. Loan growth momentum remains strong. On balance sheet, loan growth was 5.5% sequentially and about more than 50% on a YOY basis, which suggests superior loan growth over here. However, asset quality has weakened, so gross NPA ratio has increased to 4.34 versus 3% in the previous quarter, and net NPA ratio has increased to 1.99 versus -1.4% in the previous quarter. It is a subsidiary of Manappuram, so you can expect Manappuram to be weak in trade today. Back to you.
All right, Abhishek, thank you very much for that. So we'll keep an eye on Asirvad as well as we open up. But more stocks with news flow. Vamakshi's got that list. Vamakshi.
Well, good morning, Prashant. Let me first start off with Yatharth Hospitals. They've acquired a 60% stake in 400-bedded hospital in Faridabad, Haryana. This is for a cash consideration of nearly 91 crores, and this in turn values the acquired hospital at an EV of 152 crores. They additionally announced that they do plan to invest another 100 crores in the new facility to equip it with the latest advanced medical equipment. So, given this development, going with the green for Yatharth. But apart from that, also keep an eye out on Sonata Software. A Fortune 50 American multinational technology conglomerate has partnered with the company. They will be leveraging Sonata CX, which is the company's customer experience measurement solutions, to enhance its products as well as services. And this partnership in turn will encompass nearly 16 key markets across North America, EMEA, as well as Asia. So given this development, going with the green for Sonata Software.
All right, Vamakshi, thank you very much for that. So that's the list of stocks that we are watching out for. There's some flashes at the bottom of the screen. This is Bank of Japan essentially saying that they will adjust degree of easing if outlook is realized. There was a meeting today. No change was expected in terms of any action. But there are some comments which are coming saying that we'll raise interest rates if the outlook is realized. Remember, inflation is rising in Japan after almost 25, 30 years. And, very minor adjustments were made. Then there was an election. And of course, after the election, for the first time, I think since 2008, 2009, the party in power lost its majority. The general expectation is that they will pump prime the economy with more fiscal spending, which means perhaps lower currency. But at the same time here, the central bank is saying that you perhaps they may adjust rates higher if if there is the need to do so. I think there is a small uptick as far as the yen is concerned, not the dollar yuan, dollar yen. The yen's moved up slightly, just slightly, because I don't think the market seriously believes that we will see anything from the Bank of Japan this year, despite, of course, what the Fed is doing and the strength in the dollar, etc. So that's essentially what we are looking at. But let's just quickly recap, the stocks, the top 10 stocks for you. You've got L&T, Cipla, Tata Power, Yatharth Hospitals, and Sonata Software, which should open up in the green at the back of earnings. On the downside, you've got Biocon, Dabur, IRB Infra, TCI Express, and Manappuram Finance, which perhaps are going to start lower on the back of earnings and news flow. Stay with us.
Okay, all right. So those are all the stocks that we have to watch out for today. But what about the commodity cues that we are getting? We have Manisha joining in for that. Manisha, good morning. Happy Diwali. And to start off with, we're seeing a bit of a rebound in oil prices.
Oh, well, yes. As Prashant was talking about, there's a lot of uncertainty right now in Japan with the coalition led by ruling Liberal Democratic Party has lost its parliamentary majority. So there is a bit of a concern coming in from that one. And apart from that, especially when it comes to crude, it also is about the U.S. inventories that have seen a decline. And there are reports that OPEC and allies may delay a planned oil output increase from the month of December. So that is the reason we've seen 2% of gains overnight. Prices are off at 7-week lows. Remember, earlier the prices did decline 6% in the early part of the week, but we seem to be clearly climbing up at this point in time in the Asian markets. Also, good gains continuing in case of gold prices. All-time highs yet again onto that one. $27.90 an ounce is what we've done onto this one. The third quarter U.S. GDP numbers expanded 2.8% versus estimate of 3%. That is yet another thing that seems to be supporting prices right now. The markets will, of course, continue to watch out for the U.S. data that will come in today as well. But in the meanwhile, it's a mixed bag when you look at metal as a space. Copper, aluminum, zinc seem to be doing well. Can't say the same about the other metals. The China manufacturing data has come in stronger for the first time in 6 months. That seems to be supporting many of these metal prices as well.
Thanks a lot for that, Manisha. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on the markets. We'll get stock specific. Deepan Mehta will be joining in to give us some fundamental analysis.